We're half an hour away from the Open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Let's get to your top stories today. Global stocks are set to climb even higher as bullish comments from the Fed Chair Jay Powell supporting risk appetite. He also said that the U.S. economy is in remarkably good shape with labor market risks receding.
Also ahead, the French government falls as Parliament passes a no-confidence motion, setting the stage for prolonged political and market turbulence.
And I'm Sherry An outside South Korea's National Assembly. President Yonsei now facing impeachment over his declaration of martial law. We'll hear exclusively from BOK Governor Chang-yong for his views on the economic impact.
Well, we've got governments in Korea, in France, on the verge of collapsing here. If you're an FX trader, certainly a focus. You've got the Korean won. It's the worst performing Asian currency so far this year. The euro, of course, making up a large part of the dollar basket or the dollar gauge. If you're an FX or an equities trader, rather, though, your primary focus is really on what Jay Powell said in New York overnight, because he was speaking at a conference in New York, and essentially he said the U.S. economy, it's in remarkably good shape, and there's no reason that that can't continue. And so that really lifted up a lot of assets across the board. We saw global equities reaching a fresh record high. Today in the session so far, you're seeing US futures fairly steady. Asian ones just rising a little bit here. You've got the Taiwan gauge just coming online, 0.25% to the upside here. The Kospi really, of course, standing out. Again, it's that risk that we've got around political situation there. Sherry An joining us in just a few moments to really drill into the details. But broadly, as I said, Asian equities are moving to the upside. Yields, they're looking fairly steady right now. We did actually see them peeling back US ones overnight. Again, that question mark around the Fed pricing and taking a look because Powell's comments perhaps a little bit hawkish they could have been interpreted as, but really didn't shift the needle around what we see for Fed cuts over the coming few months. If you take a look at the pricing here, you've still got around 50 basis points of easing priced between now and May of next year. And again, the expectation we see a quarter point cut later this month, still really the base case for investors. Powell also talking about his outlook with the upcoming Trump administration. He says he can work with the new leadership, Scott Bessent, for instance, from the Treasury, and also said Fed independence, that will continue. Asian equities, or Chinese equities in particular, this was pretty interesting because we saw the Golden Dragon Index overnight really not catching a bid. We actually saw it closing 1.4%. That's the last close you're seeing at the bottom of the screen there. But again, an interesting dynamic, Dave, when you've got global equities reaching a fresh record high, that investment thesis for Chinese equities not there just yet. And we had local media as well saying perhaps we don't need large-scale stimulus if China can reach near that 5% growth goal this year.
Absolutely. In fact, I like how Bill put it, right? There is something for everybody in this market today, whether that's macro, whether that's buy on the dip scenario that is taking place over in South Korea. If you're going long vol, it's probably you have this window over the last 48 hours where, you know, beers are new, really. Now, this very fluid situation that's taking place in South Korea, and we'll get to Sherry An, our co-anchor. She's there on the ground for us. But just to mention that a further complication may be on the cards. We were, let's see what happens, expecting the president to make, or to speak at least at the top of the next hour. YTN TV, you probably see the bottom of your screens, is talking about that he may not actually make that address later today. Now, of course, all roads are leading to Parliament, where, of course, you have conversations there. You have the defense minister, of course, pulling back a little bit. Sherry An, as we mentioned, our co-anchor, the Asia Trade co-anchor, is in Seoul for us, trying to keep warm. Sherry, just get us up to speed here. What's taking place?
Yeah, I mean, it's warming up a little bit right now. We're seeing more people coming in, going into the National Assembly. Behind me, of course, the place where we saw a lot of chaos play out in the last 24 hours. But I'm really not surprised about the fact that local media is reporting that President Yoon might not be speaking today. We were just wondering what would he have to say after this huge political stunt that backfired on him. We were speculating that potentially he could apologize to the public, but there has been intense criticism around around South Korea about the declaration of martial law in a country that took a painful, bloody road to achieve democracy. And we have seen local media commentary really talk about the backsliding of democracy in South Korea because of this move. Now, we're expecting the parliament to vote on the impeachment proceedings, but the ruling party is now saying, according to local media, that they will oppose that vote. 8 ruling party lawmakers need to vote for that impeachment bill to proceed forward. The ruling party still is expected to perhaps expel the president from its party. Sort of perhaps have your cake and eat it too, distancing yourself from the presidential move of declaring martial law and lifting it in just 6 hours, but at the same time not really moving to oust him from power. So we'll be watching those proceedings. That could happen as early as Friday. After that, if that proceeding goes forward, then that will go to the Constitutional Court as well, where that could take a long time as well. Some justices are not seated right now. 6 justices are needed out of 9 in order that to pass. And then if that passes, within 60 days, you would need to get another election.
All right, Sherry, we're going to have much more with you ahead. That's Bloomberg's Sherry Ahn there as we're reporting that South Korea's President Yoon may not make an address today. That's according to local media reporting. But more, of course, from South Korea coming up. We're going to be hearing exclusively from the central bank governor who says the economy can withstand the unfolding political crisis.
This political event was very short-lived, and I do not see any reason why it has to change our economic outlook at this moment. We are still at this moment stick to our forecast, but I believe that our growth forecast will be more impacted by the structural factors.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labor market.
The November Jobs Report, Friday on Bloomberg.
We're just over an hour into the cash market session, and so weakness in the currency, weakness in the equity markets, although it's worth pointing out that we, at one point early on, we did reverse most of the losses there in Korea. So let's call it we're trading flat right now. Quick glance at the big 4 heaviest weighted stocks. Samsung, you have LG and Samsung Biologics, all seeing some dip buying today. Day 2 of, who knows how long this story goes on. Let's take it back to Seoul now, where Sherry Ahn, our Asia Trade co-anchor, is standing by for us there with her guest. Sherry.
Yeah, Dave, we're still watching the political developments here, as we've just heard that we are not going to potentially get that speech from President Yoon today. We're still watching what happens to the parliamentary vote and how lawmakers vote. Ruling party lawmakers are going to oppose it, but only 8 people are needed in order to pass that bill. Let's bring in my next guest, Chang Moon, Yonsei University Department of Public Policy and Management Underwood Distinguished Professor. He joins me here in Seoul. Thank you so much for coming out in this cold outside the National Assembly. What do you expect to happen? Because the ruling party is now saying that they potentially, from local media, what we hear is that they want to expel the president, and they're still going to oppose the impeachment bill.
Right. So I think, there was a meeting between president and then prime minister and ruling party leadership last night. But it seems that the president still holds his own position, tried to justify what he did. And his saying is that, that the declaration of the martial law, that was a warning, and that was the inevitable measure to him to break through the political gridlock and to protect the constitutional order. But,
that seems like a very harsh warning for a country that has gone through so much in order to get to democracy. So what does that mean for the future of the president? Could he still be in power? How are you expecting the parliamentary vote to go?
Well, I think of course the opposition party already submitted the impeachment motion, and then they reported to the General Assembly last night. And if possible, they're going to really accelerate the process so that earliest probably tonight, after midnight, they will go to vote. But the problem is that they need still 8 votes from the ruling parties. Ruling parties' perspective, because of the experience 8 years ago, President Park's impeachment, and that really led to the great problems to their political base. Actually, it took years to recover their political support, so that must be the last measure for them to take. So that I think the opposition party tried to persuade some of the people who might be on the same vote.
So I remember that it was such a traumatic experience, not only for the ruling party, but for the entire country.
Right.
What sort of parallels can we draw from that experience to what's happening right now? Because for me, it's sort of deja vu, because at that point we had the Trump presidency coming in. We, again, 8 years later, have it coming in. I mean, this is a weird turn of fate.
Right. Well, it's really deja vu because of the 8 years ago, 2016, the impeachment, actually the vote was made December 9th, about the same time. So that, if possible, tonight and then December 6th, of course, right? So that was about the same thing. And then, of course, in the U.S., Trump administration is coming back. Here we have impeachment politics. So there are a lot of puzzles we should go through together.
Is there anybody who would be ready to take the helm, to take the leadership of this country if the president is removed?
Of course, once impeachment goes through, and then it's confirmed,
within
and
60
then
days.
Prime Minister Han will fill in, and then 60 days we should have election. And then, of course, the opposition party, the leader, actually the strong candidate for the presidency, so that's why the opposition party tried to accelerate the election cycle as soon as possible.
Which again sets us up to a similarity to 2016 in terms of perhaps also the diplomatic stance of a potential opposition-led Blue House. Could we see a softer stance on North Korea? Could we see a softer stance on China? What will happen to the trilateral cooperation between Japan, South Korea, and the United States that has really happened under the Biden administration?
Right. In general, I don't think it depends, regardless of the changes in politics in Korea, the major trend will continue. I think, the 3 allies will talk. Of course, there might be some changes and adjustment, of course. But I think generally, I don't think there might be a big change. Of course, there are a lot of people really concerned about North Korea, and then now it's seemingly under control, so that U.S. and then Korean government watch very carefully and closely any signs of military movement in North Korea, so that I think it's sort of under control at this point.
The backlash seemed to be pretty fast here in South Korea when it came to the martial law declaration.
Right.
What's been the mood so far among the South Korean public, and what are the hopes that the Korean public has for the government going forward?
Well, it was really shocking, even myself, and I thought it was fake news. It's been 45 years since we had the last martial law declaration. And the public, I think, the approval rate tells, and before the martial law declaration, and the approval rate for the president was about 20%. I think because of what happened 2 days ago, and I think it might lead to plunge to maybe 1 digit, close to 1 digit, I guess.
Before I let you go, we have to talk about the shock that not only you faced when we saw the martial law declaration, but for democracy here in South Korea. I mean, the idea that the president uses martial law and also blames it on actors related to North Korea, that is nothing new for South Korea. What sort of precedent does this set, and have we backslided in terms of the progress that we've made in democratic achievements in this country?
Yeah, it was a abrupt and somewhat absurd decision by the president, and then a lot of people think it's really mysterious. And I think he might been pushed to the corner because of the rising pressure, political pressure, of course, and also the accusation about his and his wife's wrongdoings. So that might cause that abrupt decisions. But fortunately, the martial law was lifted and actually handled by the parliament very swiftly and then rescinded by the president in 6.5 hours.
Which is sort of encouraging in terms of how democracy is still in action. Chae Moon, professor at Yonsei University, thank you so much for giving us your perspective as we continue to follow the latest developments here in South Korea. We'll be watching, Belle, what happens to that impeachment vote and whether or not we actually hear from the president today.
Yeah, certainly big question marks over that and a fast-developing story, but you'll have all the details for us, Sherry, in Seoul throughout the day today. Let's turn to France now, where the government has been toppled in a no-confidence vote as far-right leader Marine Le Pen joined a left-wing coalition to oust Michel Barnier as premier. For the details, let's go to our Bloomberg desk news editor, Jill Desis, or Bloomberg News desk editor. But, Jill, it's kind of... We talk about Korea, where a political gamble has backfired, and you see pretty much the same sort of dynamics happening in France, where Macron really wanted to try and isolate Marine Le Pen, and if anything, she's just increased her power.
Yeah, I mean, this really does show us that snap election that Macron called earlier this summer was just such a severe miscalculation. I mean, as you said, he's trying to consolidate power, ends up essentially just giving her more, her far-right party has much more of a mandate in parliament, and now you're seeing all of this manifest, with his prime minister being completely unable to do his job, essentially, and now there's not really a clear path forward for France at this point and for Macron. I mean, he can't call another election until next June. Right now, Le Pen and her party lead in the opinion polls, and so it already looks like he essentially just has to do business with her and ultimately concede to more of her demands if he ultimately wants to move things forward. I mean, we'll have to see who he eventually installs as the next prime minister to kind of get things going in parliament again. But I mean, with this pick being such a disaster, facing in this no confidence vote, it's really difficult to see how they get much done over the next several months right now. And,
I mean, does this simply underscore, I don't know, the reality that Europe's in generally bad shape ahead of a new White House that's coming in, and economically and also politically?
Yeah, David, I think that when you look at not just what's happening in France right now, but also Germany, obviously, where the chancellor, faces a no confidence vote later this month, you've got all of this political turmoil that's ultimately happening here. Obviously, the UK, going through a lot of its own issues after leaving the EU. We have a pretty concerning situation in Europe. You've got Donald Trump actually traveling to France this weekend for the reopening of Notre Dame, a good opportunity for him to talk to Macron. But what kind of position is Macron even in to, hold kind of, political talks with Donald Trump ahead of him returning to the White House when you've got this big embarrassment that's just happened? So it's hard to see how Macron even has any leverage in any kind of talks with Donald Trump right now. And that's all just, leading into, Donald Trump's return to the White House, leaving the EU in a really weakened position, raises a lot of questions about what happens with Ukraine going forward, and then ultimately how some of these geopolitical relationships look like in 2025.
All right, Jill, thank you so much. Jill Desis there on, I guess, the next things to watch as far as the French story is concerned. Yeah, he'll need to pick a new premier. All right, the fix of the day is out. We're looking at a stronger currency, right, on Chinese currency to be more specific. 718.79 is the midpoint of today's plus 2- playground today. The other thing that is just taking place, we're about 20 minutes into the cash market session in Singapore, and that market is...
Well, nearing a record high, and you we saw global equities reaching a record high, and it just really speaks to how much traders are listening, putting those geopolitical questions to the side. It's that focus on what did Powell say overnight in New York, and it was essentially that story of U.S. exceptionalism. The outlook for rate cuts is still intact. That base case hasn't been challenged too much, and that really is supportive for equities in this part of the world. And you see Singapore there. Macquarie Group is one saying we could see the 4,000 level within 2025.
Yeah, okay. There we go. Equity. I think our question of the day today is what's more important for markets, politics or economics? And I guess you answered the point there. Set the politics aside. It's really economics that will drive this thing. And yeah, there's really a lot of momentum in this global bull market going into 2025. And juxtapose what I just said there, Futures are pointing down going into the open today here in Hong Kong. Just under 9 minutes away the opening bell. This is the China Show. All right, going into the open today, we're looking at autos and crypto in particular. So on the auto space, I think Belle can talk more about this, but 18% up overall, 52% within that as far as EVs and hybrids go. Get my figures correct. 2.4 million, I believe, was the total number for November. 1.2, I think, was the 1.2 million for... Anyway, more on that later. On the CGB rally, we should be around 2%. This is something we don't normally get as well. Hong Kong is selling yuan bonds today, so watch for that very closely. And, of course, we have the briefing coming out of the Ministry of Foreign Affairs later on towards the afternoon session. Right, going into the open today, futures are weaker. And, again, this is really, I guess in many ways, underscores the trade that's really worked out and rewarded investors from either being neutral, underweight these Chinese markets and simply going long U.S. equity markets, which again hit a record overnight. And as you can see, we've been stuck in this tight range for the better part of the last 4 weeks or so. And we'll talk more about the Xinhua story. Might be telling the markets to manage their expectations ahead of next week's Central Economic Work Conference.
Yeah, maybe no big bang stimulus. Now, you mentioned the figures, and actually I've got the article here. So I can say that Dave was pretty much bang on for those auto figures. November sales for cars seen surging 18%. It is sort of typically a busy period for the end of the year because you've got those automakers that are trying to reach their year-end targets for sales. Not really doing so much so far. We're seeing these mostly setting up lower. BYD down 1.2%. Also taking a look at a buyout offer because we've got the logistics real estate firm ESR Group, and it's received a binding offer for that takeover offer valuing it at 13 Hong Kong dollars a share. So you're pretty much around that mark now as you see it moving up 5% in the pre-market. So that's obviously something we'll be tracking at the open in just a few minutes from now. But you're watching the China Show. The open is next. And we are, as you said, Dave, looking to a bit of weakness, even though we saw global equities at a record high. Welcome back. You're watching the China Show, counting down to the open of markets here. And really, it's sort of standing out for the wrong reasons today, Chinese equities, because you've seen global stocks hitting a record high. China is just not catching up here or catching that investor interest. And you kind of have to wonder how much that Xinhua commentary weighs into this, because you've got policymakers that are perhaps indicating through that stake-backed media that essentially we really should moderate or temper expectations if you've got any sort of predictions for big bang stimulus next year.
Yeah, I'm just opening up that Xinhua story, and you guys have to bear with me because it's in Mandarin, but effectively I think it's about 4,000 words. Suffice to say that even if they don't meet the target, it's not going to be a big deal, which I guess, to Belle's point, limits the room for what they could announce next year. But again, a lot will be in the detail on what the budget deficit target looks like going into the two sessions, which I guess is in still about four months from now. But yes, the headline there, let me just translate this very briefly in my head, so bear with me. Yeah, okay, fairly limited room. Things are going to be okay. 4.8%, why not? Not too bad as far as that is concerned. 0.3% to the downside, onshore markets. The other thing we want to point out is we have a Ministry of Foreign Affairs briefing later on this afternoon. Pay attention to that. As far as sector movers go, autos, we talked about that. Crypto is back. We've yet to talk really at length about Paul Atkins, who President-elect Trump has picked as the new SEC commissioner, if his name sounds familiar, because he was back a couple of years ago. Very quickly, let's turn the page. Please have a look at Hong Kong and where we are as far as that open is concerned here. So we have been, for the people that run literally out there, it's been stuck in zone 2 for the better part of the last, 4 or 5 weeks or so. Tencent, HSBC, Alibaba, AIA, Meituan, and so we talked about the car stocks and auto stocks. So the prelim numbers from the Industry Association came out yesterday. And as Belle was pointing out, in case you missed it, so we were up 18% year on year overall. Flip the boards, please, if we can. And within that, though, we saw a 50% rise in EVs and hybrids to about 1.2. So you do the split of the pie, 1.2 million of the 2.4 were EVs and hybrids, so roughly 50% of the market. And crypto could happen today. We're knocking against that psychological level of 100,000 and 0.8%, 99,000, call it even here, on Bitcoin. Very quickly, we're looking at the stock, which is resuming trade today. Binding offer, I believe, is the conversation here. $13 a share. Coming up on your screens very quickly. ESR trading at about 12, so just a little bit below where that binding takeover offer is currently. There we go. That's the move. It's quiet. It's been quiet across these Chinese markets recently, Belle.
Yeah, well, it just doesn't seem like there's enough compelling reasons to want to get in at this point in time, and we do need to wait for those details that come out in terms of the stimulus push for next year. But taking it back to what's happening in Korea, actually, because we've got some local media that was reporting here on the impeachment vote, so we know that motion has been raised by the opposition party, and we're understanding that they're going to be voting on it on December 7, so something that's really going to extend into the weekend. Again, this is according to local media, but we do understand from Money Today that the South Korea Parliament will vote on the Yoon impeachment measure on Saturday, that would be. So let's talk about the market reaction to this. We have seen Korean equities sort of being stabilized somewhat, but you've also got to put that down to all the reassurances that have come through from financial regulators, the BOK. They want to put a floor under asset prices and not see that sort of contagion. But let's bring in Matt Quaife. He's Global Head of Multi-Asset Investment Management at Fidelity. So, Matt, what's your take on what's happening in Korea right now, and do you think that sort of deters the investment thesis around the country's stocks?
Well, I think the political situation will resolve, and it actually could resolve with more fiscal looseness in Korea. And if you take a step back, Korean equities are a classic value trade. You're basically paying single-digit PEs for high-quality companies that can grow, that can be there. They face a few headwinds, so it's the semiconductor cycle and just the uncertainty around tariffs. And like with every value trade, timing is the hardest part, so we don't know quite when it will come good. But if we got some more certainty around what tariffs are, markets like certainty, and we could see a little bit of a retracement. Yeah,
I think it's trading at 8 times earnings. I mean, if you thought China was cheap, this one is actually cheaper on a PE basis. But I guess the question right now going into next year, and amidst this U.S. bull market that continues to remain a bull market, what is the appropriate exposure to the equity world outside New York, frankly?
Yeah. So the big picture for investors this year is you're going to have a looser fiscal situation in the US. You're going to have China stimulating, and you've got the Fed on a loosening path. That is basically a party for asset allocators like myself. Yeah. Therefore, risk assets should go up. One of the issues we've got at the moment is that is really a consensus view, and everyone's pointing in that direction. So technically, we could easily see some volatility in the coming months when something doesn't quite meet expectations and everyone gets slightly wrong-footed. But shut your eyes. 12 months from now, you want to own US mid-caps, you want to be overweight risk, you want to have decent carry in the short end of high yield curve, and then you want to play tactically between there with some of the kind of, let's say, phase 2 trades around Trump.
Right. But just to clarify that, you mentioned mid-caps. I picked up on that. Why not large caps, though? Something
well, the valuation is not quite there on large caps, and they're going to potentially be regulatory risk, policy risk around large caps. Mid-caps come at a much better price, and they play domestic U.S. growth. And really what we're seeing on the policy side is more certainty around domestic U.S. growth, and they can reprice higher.
Just want to clarify as well for our viewers, the opposition party is seeking that impeachment vote this Saturday, not the ruling one. It is the opposition party. The ruling party has so far opposed the idea of ousting President Yoon. But let's move away from what's happening in Korea, because there's also political strife underfoot right now in France, of course, with what happened with the Barnier being ousted as well. But also Germany. I mean, the Chancellor there facing a no-confidence vote next week. But how are you thinking about the growth story in Europe versus what's happening in the US?
Yeah, there's not much story. That's the problem. But the thing is the market knows that. So I think kind of price-wise and correction-wise, we could easily see some relief in Europe over the coming months. Again, the market has moved quite a long way post-US election, and we could easily see short-term relief. But over the next year, you'd still favour domestic US growth over European.
What drives that relief then? Is it the ECB cutting rates, or is it something else that happens instead?
It's hard to say what does that. You'd just say the market's set up technically so that anything can just kind of trigger it, and people just suddenly don't want to be underweight Europe. I think just from a positioning point of view, it could be anything quite small. The political situation, for instance, in France, could resolve itself in a different way.
Okay, I think all roads keep leading back to the U.S. here. Is inflation going to come back next year, reaccelerate, let me be more specific, and is it going to be necessarily a problem for risk assets?
So the situation I described basically means that you don't need to worry about growth just rolling over, but you do need to worry more about inflation. Now, the base case scenario is that markets go up, but as an investor, you want to think, what's my biggest risk? And the biggest risk is inflation. And your biggest issue with inflation being the risk is your bonds don't protect you. So your classic investor that's holding equities and bonds, the bonds don't do what you need. Right. So the key thing is to own the risk, but then protect your portfolio in smarter ways, whether that's liquid alternatives, put options, different areas where vol's priced attractively.
Yeah, well, that's a good point you bring up, because bonds didn't do that job in 2022.
Right.
They have somewhat snapped back to doing that recently. And you're saying, so this time next year, bonds is not the way to hedge if inflation comes back?
If the world is going to be fiscally looser, there's more of a risk on the inflation side than the growth side. Okay. Also, whenever the inflation has gone above 5% historically since 1940, you've had waves of inflation afterwards. There's a ripple effect that comes through markets, and we could see that ripple coming back in 2025. So it's not that it's the base case, but as an investor, you're thinking, do I need to worry more about recession, or do I need to worry about inflation repricing PEs? And you need to worry more about the latter.
Do you look at gold at all, or Bitcoin in that similar vein?
Yeah, gold is an interesting one. We are really thinking about what we call Trump phase 2 trades. So what has not done well now, but will potentially do well. And I think gold's been a funding source. Crypto's been doing so well, other areas have been doing so well. But in a world that's slightly more inflationary, gold could do really well, and it's probably been unfairly beaten up in the last 6 weeks, and it's a good place to play. I'd also say gold miners as well on the equity side.
Is that why also cash has been, this time last year, I remember this, going into 2024, there was a mountain of money in cash. People thought that would have been drawn down by now, yet here we are, 12 months later, $6 trillion up. Would cash be a good liquid alternative? You probably will say no, but yeah, just tell me why. Yeah. Tell me why not.
No, I think it is. But if you allocate to liquid alternatives, you get cash plus the alpha, basically. So if you're long short, you get paid cash anyway. So there are just smarter ways than cash to put something in your portfolio.
How are you thinking about China? Because we've been saying about sort of sheer underperformance, but also the outlook around stimulus for next year.
Well, we've thought about it in three phases. So the initial rally was hedge funds removing all their shorts, investors like my industry removing underweights and such like. So you have that positioning relief. Now we're in the fiscal stage, then we're in the delivery of earnings. We think eventually the fiscal stage will come through. Like this stimulus will come through this year, mainly for the reason that they can't be seen to fail. And also they were very explicit about the stock market being part of this policy. And so I think that's it. For numerous reasons, they need this to work by the end of the year. And with that in mind, I think we will go higher in 2025. It's just when and how.
Yeah, it's difficult to time the market. There was a brief period a couple of weeks back where if you were underweight or completely did have exposure to China, you were punished for that. Is that a risk? Is that a real risk going into next year? Or do I just wait for the catalyst and then think about what the appropriate exposure is? In other words, do I time this?
I think a lot of investors are sitting neutral, wait to see at the moment. For us, we really like onshore China relative to offshore. We think that's more directly playing out what the story is in 2025.
Matt, it was a pleasure to see you. Hi to the team for us. Have
Thank
a great
you very
holidays
much.
ahead.
Great to see you again, guys.
Matt Quaife there, Global Head of Multi-Asset Investment Management at Fidelity. Right, for our Terminal subscribers, you can read more, and we started that conversation there on what's taking place in South Korea. We have a good taking stock piece right now that if you're worried about what's happening in Korea, it's probably not you should take up your mind space to worry about it from an equity perspective. It's probably in currency. So we've taken this back the last time there was an impeachment. What outperformed, what did not. Check that out on your Bloomberg. Plenty more ahead. This is The China Show. Welcome back. Just a quick glance at equity markets in South Korea. Well, really cross asset there. So the won is weaker. We're getting a pullback across the vol index today, although the big spike, of course, yesterday. What you're not seeing on your screens is that despite price being fairly range bound, volumes are still very, very heavy there in South Korea. I think we're about 30% heavier than usual for about an hour and 43 minutes into the session there. We are off the lows of the day, so it is a very fluid story. We've gotten a ton of headlines over the last hour or so in terms of the dates to watch and the possibility that we might not get, in fact, the president who was set to speak, maybe still is. We'll see what happens with that. And yeah, now, in case you missed it, we had this conversation yesterday, exclusive one with the Bank of Korea governor, and as far as they are concerned, they're downplaying any potential fallout here from this week's political chaos. Now, our colleague Linda Ahmed did speak with the governor on what impact he possibly sees given their policy outlook.
It's very hard to predict which options the political process will evolve. But I think you know that the Korean government officials are well trained. We are well experienced in handling the several difficulties. So I think while in government in transition or in this transition period, which we believe a couple of months, I think we have many tools and talented government officers to handle this macroeconomic situation.
Might the tools include another rate cut? You did a back-to-back rate cut in anticipation of Trump's tariffs, which you say will weigh on the economy. Might we see you cut rates even more?
Oh, you mean that because of this political turmoil? I don't think so, because as I mentioned, this political event was very short-lived, and I do not see any reason why it has to change our economic outlook at this moment. We are forecasting our growth rate this year will be around 2.2%, and next year it will be around 1.9%. But I think we are still, at this moment, stick to our forecast. But I believe that our growth forecast will be more impacted by the structural factors, such as change in global value chain, and also the facility rate and demography in our country. So these structural factors will be much more important factors in determining what will be our monetary policy will be and how we'll change our forecast, rather than this political event, which is short-lived yesterday.
Governor Rhee, you're expressing optimism despite the political turmoil. What scenarios then would worry you?
Look. I do not mean that everything will be smooth. I think the last couple of months there will be a lot of tensions among the political parties, and this political debate won't be as smooth as probably wished for. But what I mean is that, those kind of things are within the realm of what our government officials and experienced government officials and professionals can handle using various tools that we have. And on the other hand, what I'm worrying about is that it's more like there are a lot of global uncertainties, as you mentioned, that the major countries, policy issues, tariff, and also changing of global supply chain. And as you mentioned, that the geopolitics in Europe is also quite uncertain. And what I'm worrying about is if our own problem is, in some sense, amplify the global uncertainty, then maybe we may have a little bit, more difficulties than I'm currently expecting. But I think what we are doing is we have to adapt what has happened. So at this moment, whatever happened in politics, whatever happened in political projections, I think the government officials like us and central bankers in Korea are ready to react to it.
Investors we talk to say we should brace for volatility, especially in the Korean won. We've seen it move, as low as 1.5%. It's recovered somewhat. Is there a red line in the sand for the Korean won? I mean, at what stage will you be defending that currency?
As Linda, Korea has been on the flexible exchange regime for a long time. And, we are not targeting for specific level of the exchange rate. But on the other hand, because Korean won is not internationalized, we are concerned on the volatility of our exchange rate and the pace of the exchange rate movement. So definitely using the integrated policy framework, we are trying to stabilize the abrupt movement of exchange rate. But at this moment, I think if you just look at what happened yesterday, for example, as I mentioned, the Korean won depreciated quite sharply, about 3% immediately. But now I think we are slightly above the level that we had before this political event happened. So I think in some sense, using various tools, including our liquidity injection, in the FX market too, I think we are now managing the situation better than you or some other people may as a concern. My basic point is that if you look at what happened in our political arena, this tension happened because of this event has happened because of political tensions, not any problem economic fundamentals. So in that sense, I think that the impact will be short-lived, and we can focus on the economic strengths and the weakness of Korean economy rather than political side effect.
That was the Bank of Korea governor speaking exclusively with Bloomberg Insight anchor Haslinda Amin, and taking you to some live pictures now from Seoul, where we do see outside of the parliament, or inside the parliament rather, where the Defense Committee is convening for a meeting where the army chief, that's Park An-soo, is expected to report here. He is the martial law commander. We know that the president has already replaced his defense chief, and he also said that troops exercising martial law were acting on his orders. But a very fast-moving and developing story this morning. Again, just taking you to some live pictures there with the military chief in Korea. If you are a Bloomberg subscriber, you can also catch up with all of our interviews by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and also asking questions for our guests during our live shows. Check it out at TV Go. Time now for Trending in China and a look at what's making headlines in national newspapers. And this is something possibly playing into market sentiment today, because ahead of China's Central Economic Work Conference, that could be starting next week, but state media is sending signals on how to view economic growth. The official Xinhua news agency has published a series of articles, with part one, which I believe was around 4,000 words, is focusing on the growth rate. So it downplays the importance of fast GDP growth, saying that while it once played a great role, it's cost a lot in terms of resources and the environment.
Yeah, the article also cautions against what it calls the worship of speed, saying it would affect, future growth. And certainly the question, in fact, the title, I believe, of the actual article itself is, the questions we need to ask effectively. I'm loosely translating here. When you look at the growth rate at 4.8%, actually did deliver some stability despite the fact that it's at 4.8%, for example, for the first 3 quarters. The question is not whether China can grow faster, but whether it needs to grow faster. And Xinhua says the expansion slightly was below the government's 5% target is acceptable. Now, could this be a signal for limited room for larger stimulus and probably setting the stage to manage expectations ahead of next week?
Yeah, I mean, we had that target of around 5%. It seems already from the commentary we're not going to quite reach that, but it seems like Beijing wants people to know that's okay, because they're not so much focused on that breakneck speed of growth anymore. It's more on that high quality growth instead. And maybe that does also play into the stimulus, because maybe it also looks a little bit more targeted. They've obviously got those sectors that they want to continue to develop, and they have that need around things, for instance, tech self-sufficiency. They want to have a consumer-led economy. How they're going to go about creating that is perhaps the key question. And again, we'll be looking to that work conference next week, and any sort of clues we get off the back of that, how they're going to do it.
Yeah, I think we chatted about this yesterday right before the shows, right? So, we obsessed over this growth number, this news that we have to talk about as well. But, if you take a step back, look what they did with electric vehicles, for example, right? And how that's gone from, and look what they're about to do, if not already, with healthcare. That's another thing that there are the longer-term priorities that don't seem to be getting the attention that, before you know it, 10 years on, they're on top of the world, and it's become a political issue because it's been going too well. But anyway, I guess back to the here and now, every economist we talk to basically say that if they want to meet the growth target, they could. 0.2% is an easy thing to do. It's really getting the consumer spending, right? The quality of growth. Anyway.
Big picture questions, but back onto the market analysis as well. We've got a lot more ahead in the next hour. We're going to be speaking with Prestige Economics just ahead. They're looking at currencies, commodities as well. Welcome back to the China Show. Taking a look at how Hong Kong's faring just about half an hour into the session. And you know what, Dave?
What?
Kind of got a little bit sad if you're an investor in Chinese equities, because...
Why is that?
Well, global stocks are at an absolute record high.
Yeah.
J-Powell has pretty much lit up risk assets across the board. And Chinese stocks are still not bid. We saw the Golden Dragon Index, for instance, off around 1.3% overnight. And today in the session so far, what's leading it lower has been that darling over the course of this year. Meituan is dragging down consumer discretionary, and that stock off 2.6%.
It's a good reminder that there are opportunities, but they remain tactical, right, within the market itself, right? So Meituan, to Bell's point, if you got in at the bottom, obviously, this is hindsight, you've done very well, but the stock really did very well up until recently. But you take stock as we close out the year. Global stocks are up, 20% this year, 27% on the S&P 500. I think the other only major benchmark that's done better, I think, is Taiwan. I have to recheck the statistics, but Taiwan's up 30%. But both are indicative of the same theme, which is
the AI trade.
It's AI trade, right? Apart from that, other markets in Asia have done relatively well. India, up until a few months ago. Japan has been stuck. Singapore, by the way, briefly for a few seconds earlier on, was at a record high. We'll see how it closes, but it's also done quite well. The other market we've been focusing on in South Korea, of course, given the news that's taken place there so far. And, we're going through this very, very quickly. Some of the banks, okay, I think this is interesting. This is mainly speculation for now, but one of the things that's really caught the attention of global investors on the Korea story is this value-up program that they embarked on, I think, early last year. Talked about early last year. And might that be at risk, the question mark, given the changes that we might see politically there?
Yeah, well, value-up programs, people would also make the point that Japan, obviously being sort of the leader in this, that's a decade in the making. So this program is still sort of in its infancy. But certainly Korea has been caught up in this, but we are sort of seeing still that floor under asset prices to an extent. And the Kospi, for instance, it's down, but not too much really today.
Yeah, they're using that as an opportunity, really. S&P futures, as you can see, the fact that we're at 6,100 still boggles my mind. And the drop in the drop in the yield story, given the Jay Powell, was hawkish tone, but not hawkish enough to remove a cut as being base case from the December meeting. Didn't really weigh on the dollar. I think that's a good sort of reminder of how that's playing out. But yeah, back to the Korea story here, Bill.
Yeah, well, I mean, it's a very fast-moving and developing story because actually this hour we were expecting an address from the South Korean President Yoon, but local media is saying that actually could not happen, or it might not happen today. And another outlet, for instance, has reported that Yoon would apologise to the nation for his short-lived declaration of martial law. So for the latest, let's bring in our Chief North Asia correspondent, Stephen Ingles. So, Steve, it's the big question. Is Yoon going to speak or is he not going to speak?
Yeah, that's the big question. And what is he going to say, right? Maybe now there are other reports that are saying that the vote for the impeachment is going to happen on December 7th. That's what the opposition is pushing for. We know that some that are still loyal, obviously, to President Yoon in the ruling party are going to try and thwart that vote and thwart that move to essentially impeach him. And then if that would get the two-thirds needed majority, it would go to the Constitutional Court, which could take some time to make a decision. Then if they decide against President Yoon, it would be about 60 days until a new election for the next president. So we're getting a little bit ahead of ourselves, and maybe that's why, I'm just guessing here, President Yoon will not address, if that's true, according to, is it YTN TV, I think is saying that he will not address. This is not him right now. This is him, of course, in that 6-minute, shocking late-night, Tuesday night declaration of martial law, which, of course, within 6.5 hours later was rescinded, throwing political turmoil, well, throwing the nation into political turmoil. So we have to see, you know, if it's going to happen, the vote is going to happen Saturday. That's speculative right now, and according to media reports. Perhaps President Yoon is using the next couple of days to garner the kind of support he needs within his ruling party, get the ducks in a row, count the votes, and see if he can hold on to power. That's the key, I think, for him right now. And then he can apologize at any time. Does he need to apologize right now? Does he capitulate? Does he double down? We don't know.
Can we trust that this, while it's messy, remains a political mess and not an economic mess?
Well, one leads to the other, right? I know the Bank of Korea Governor Rhee essentially said right now it's a short-term political crisis, paraphrasing his words, that does not necessarily equate to an economic crisis that would basically lead to another interest rate cut. But keep in mind, they've had 2 successive interest rate cuts. They tend to not like to do back-to-back rate cuts unless there's an economic crisis. Well, does the political crisis lead to an economic crisis? He's trying to sort of mitigate and talk down that is actually happening. But again, we might be getting ahead of ourselves. What is going to happen going forward if there is a presidential change, in Seoul at a time when Donald Trump is also coming into the White House on January 20th, at a time when, President Yoon's emphasis has been on the trilateral, bolstering the trilateral arrangement between Japan, the United States, and South Korea, and maybe distancing itself from the economic benefits of China. Well, the opposition leader, Rhee, he wants more economic engagement. He told Bloomberg News in an interview earlier, not at this time, but I think was it earlier this year or last year? I'm not quite sure. He essentially said they need to separate a little bit the political differences with China from the economic gain that is still there on the table. So there could be some very interesting times. But earlier, you guys were talking about the Corporate Value Up program.
Yeah.
That's all about the Korea discount, right? So the Korea discount is about the lack of corporate governance in the chaebols in Korea. Well, this political turmoil is raising questions about the political governance, obviously, in South Korea, which is not going to do it any favors in trying to assuage the fears of institutional global investors.
Okay. Stephen Engel, our Chief North Asia correspondent there on the latest over in South Korea, and something that we should have been watching. We were supposed to be watching today, no longer happening, I believe, which is the president speaking. Anyway, coming up on shows, Jason Schenker out of Prestige Economics, the president there, joins us to talk us through a lot of things, really. The turmoil in France, OPEC plus, oil and FX, plus what the Fed needs to do, what it will probably do come December, what the dots probably look like. That conversation is just ahead. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market weakness we saw in the summer was a head fake.
What raises this question, basically has the narrative been set?
We are still in the throes of a strong labor market.
The November Jobs Report, Friday on Bloomberg.
Okay, just an update of these markets, and it's looking like losses are accelerating in most parts of this Chinese equity market. So Hang Seng's down about 1.1%. Hang Seng China is down for the first time in 5 days. That's down 1.2%. So we could actually end the day, we'll see how this goes, below 7,000 on the Hang Seng China index. And Bell and I were talking about this. Trouble getting that out. This might have to do with that Xinhua report tempering expectations around the stimulus that investors were expecting to come, and it doesn't seem, based on the tone from that story, that large-scale stimulus is on the way.
Well, it's sort of talking about the growth outlook, and it's a 4,000-word piece,
yes.
And it's going to be the first of several, I think. So it's really that chance, it seems, for officials to be able to speak directly to the market. And the sort of, the sentiment is, firstly, don't expect any major stimulus. We're near enough to our growth goal that it's not necessary. And also, we're sticking with that focus. We still want to see high-quality growth. It's quality over quantity when it comes to China's economy. So that's sort of really playing into the sentiment today, and you're seeing that reflected because consumer discretionary, we wanted to see something around stimulus in particular, but consumer discretionary is what's leading stocks lower so far.
Yeah, and to be fair as well, we know that it's going to take a lot of time to turn the ship around, and we have already seen early signs that it's starting to work, and it's sort of put a floor underneath certain categories of retail sales and what have you. Right. But there's a bigger mess in France.
Well, capitulation as well, because the French government has collapsed after a no-confidence vote, pitching the country in what's likely to be a prolonged period of turbulence. Bloomberg's Caroline Conan reports from Paris.
The French Prime Minister, Michel Barnier, has lost a vote of no confidence. 331 votes against him, meaning he has to resign. His government will be the shortest lived of the Fifth Republic since 1958. This is, of course, after the National Rally far-right party of Marine Le Pen decided to join forces with the left-wing alliance NFP in order to topple this government. The far left had actually called this a victory, a historic day. Of course, Emmanuel Macron, the president, will have to name a new prime minister over the next few days or perhaps a few weeks. Even if the mechanisms do exist in France to avoid a total government shutdown, the issues remain because you have a hung parliament since the snap elections last July, which created no majority. The former Prime Minister Gabriel Attal has called for all parties except the far right to gather over the next few days in order to try and find a compromise. But the former Prime Minister Michel Barnier, in his farewell speech at the National Assembly on Wednesday night, said that the issues will not disappear with the magic of a no-confidence vote.
Okay, from Europe, let's then talk about the U.S. story, give you a more complete macro picture going into the latter part of this week. So Fed Chair Jay Powell, of course, talking about how this economy has remained resilient, maybe opening the door really to a pause, maybe, at the December 17th meeting, although he wasn't quite hawkish enough to remove pricing around that being basic. I think it's still 18 to 19 basis points of 25 that's priced for the upcoming Fed meeting. Jason Schenker is with us, President and Chief Economist at Prestige Economics. He's been ranked by Bloomberg as one of the top forecasters in categories, including U.S. jobs, which comes out, of course, later this week, oil prices and currencies. Jason, as always, sir, a pleasure to have you on the show. How many cuts do you have currently priced in your own models that we have for this cycle for the Fed? How low do we get?
Well, I think we're expecting at least 4 cuts next year. We still think there's a pretty good chance we could see one this month. And there's going to be probably another 3 cuts that we would see in 2026. So we think inflation is going to be here spiking probably in the next couple of reports. But then by the second quarter, and this is because of year-on-year base effects, while we might see in the November and December CPI reports that come out respectively in December and January, we could see the headline year-on-year CPI number run up towards 3%. We think we might be a lot closer to 1.5% by the time we get through the second quarter. So we're going to see this weird dynamic from these year-on-year base effects, a rise up in inflation well above the Fed's 2% level, but then we could be below that. And that could really incentivize those additional rate cuts, because the risk of beyond disinflation, deflation could become a bigger concern.
Yeah, actually, David and I were just talking about that this morning. If you were to break down the US CPI, a lot of it is sort of around that zero, even getting into deflationary territory, but shelter costs remain really high. How concerned are you about Trump's economic policies and the inflationary impact of those?
Well, there is a great deal of concern around tariffs. We did an analysis of the CPI. If you look at what's in it by category, it's something like 18 to 19% is what's goods excluding food and energy. And of course, if we look at the U.S. as a whole, right, a net food exporter, for energy, net product exporter, there are also some things that we have been exporting like LNG in larger quantities. So if we look though really at probably the biggest concern, which are these goods excluding food and energy, again, it's around 18-19% of the total CPI, but that's if you include all of those goods. That's probably where there's the greatest concern. I think what we're seeing right now, because we've seen it in the first administration of President Trump, I think we're going to see it in the second administration, this sort of distributive negotiating style and tactic where there's a lot of posturing in order to get to what the ultimate goal is. I think one of the key ultimate goals is to stop the transshipment of manufactured goods from China through Mexico, and also to prevent it, finished goods or relatively finished goods, from being transshipped through Canada in order to avoid tariffs. So that's what I think they're really trying to target, reducing the transshipped goods that come out of China, go to Mexico, and then get shipped north of the border into the U.S. That's what they're trying to reduce. And I also think President Trump is going to set a goal, obviously, of trying to increase border security and reduce the fentanyl crisis. Those are the things that are really top of mind. And right now, what we're hearing are things that are very concerning, especially for manufacturers and for importers. But I think a lot of it is posturing ahead of a distributive negotiating situation.
But creating or stopping the shipment of goods from China, even through those intermediary companies or countries, of course, yeah, the US does want to have things being built in America for American consumption. But creating factories at home takes time. So what happens in the interim period?
Well, that's right. It does take time to build up more of an industrial base that we have seen in the U.S. eroded over time, but we do have now kind of the biggest industrial base since the Vietnam War. It's not that the Trump administration would want to stop all imports from China. That's not the goal. The goal is to stop tariff avoiding imports, right? Where Chinese goods are coming out of China, going to Mexico, and then coming, right, because of the free trade, USMCA, NAFTA, they're able to come across the border without tariffs. Avoiding that circumvention through transshipment, that's what the administration, I think, really wants to target. And of course, that was negotiated. There is a part of the sunset clause that was renegotiated with the USMCA as part of that for review in 2026. Transshipments are clearly going to be up for discussion. And of course, they're going to be a priority for the administration long before we get to that 2026 review. It's really the circumventing of the tariffs, where the Chinese goods are being shipped or manufactured in a way to avoid tariffs. That's what I think the target's really going to be going forward. Building up a domestic base is going to take time. Mexico, you're seeing more manufacturing there. We're going to see more manufacturing over time, but making sure what's Chinese owned, what's Chinese imported, that's what's transshipped, that's where the focus is.
I'm curious, Jason, particularly where you are in Texas, what's the view of China economically? And are Chinese companies viewed as I'm curious, as economic threats?
Well, there is a U.gov poll that came out, I think, earlier this year that showed the vast majority of Americans, something like 80% of Americans, view China as the enemy. So this is a bipartisan issue across the United States. Under the Trump administration, you saw the Section 232 and 301 tariffs. Under the Biden administration, you have seen more tariffs, more trade restrictions. That executive order from last August that put restrictions on investments Americans and American companies could make in certain technologies of concern, or in certain technologies, AI, quantum, semiconductors, microprocessors, in countries of concern, which included China, the Special Administrative Region of Macau, and the Special Administrative Region of Hong Kong. That restriction came out of the Biden administration. So we're going to see, I think, even more restrictions going forward, and that was going to happen no matter who was elected.
Jason, it comes down to, I think, in one major part, the strength in the U.S. dollar. And the reason I bring that up, I think you have the jobs report coming up this week. There's an OPEC meeting as well. I mean, let's help global investors here. They get this one right. They get half the equation right. Does the dollar remain strong in your view?
I think the dollar does remain strong. I do think it will be weaker at the end of next year than it is at the end of this year. But a lot's going really good for the U.S. You look at the IMF forecast, U.S. was the fastest growing advanced economy in the world last year. This year, Spain is supposed to be a little bit stronger than the U.S., but the U.S. still coming in at the second fastest growing advanced economy in the world. That means not only is it the biggest economy, but it's one of the absolutely fastest growing advanced economies out there. It's a great place to send your money. I think that right now investors, they're looking at China. They're looking at the potential for a kinetic conflict between China and the United States over Taiwan. And they're thinking China looks like a great place to send your money if you never want to see it again. That's what investors are seeing. That's why you're seeing those FDI numbers are coming down so fast. Who are the big winners? India's seeing a spike in FDI. Mexico, the UAE, you're seeing lots of other unaffiliated, unaligned countries are seeing spikes in FDI, but money and business is coming out of China very quickly. And I think there is a lot of concern of what we're going to see going forward in a Trump administration. For the dollar, the biggest story is strong U.S. growth, strong jobs. Almost 69% of third quarter GDP in the United States was driven by consumption. We have lots of jobs in the U.S. The JOLTS data revised last month. We saw 7.7 million, over 7.7 million open jobs in the United States in the month of October. Lots of open jobs. Jobs report this Friday, likely to be solid. A rebound up from that October number, which was weak because of hurricanes and strikes. U.S. economy looks good. Lots of tailwinds. Optimism because the election, which could have been very tense and led to uncertainty and political violence, it was resolved and very clear who won the election. It was swift and it was decisive. Because of that, there's tailwinds and optimism for the dollar, for the U.S. economy in the year ahead, especially if the Trump tax cuts become permanent.
Jason, that sounds like the euro might hit parity.
I don't know if we're going to get exactly to parity, but the European economy is weaker. You look at that Eurozone manufacturing PMI, it's contracted for 29 consecutive months. It's a question. It could happen. It'll really depend, I think, on what we see in December if we're going to get towards the end of the year, because those Fed forecasts, they're going to probably include, again, additional cuts going forward as they did in September. I think it'll probably be pretty similar in terms of expectations of interest rate cuts. But if you're expecting more interest rate cuts, it's tough to say, well, the dollar's going to strengthen more if the ECB and the Fed are probably going to be cutting interest rates at about a similar pace going forward this year, even if the Eurozone economy is weaker. I think at the front half of the year, that's probably where you have the greatest chance of the dollar strengthening in Q1 as we see a spike in those CPI reports, the December report out mid-Jan. That's something to keep an eye on. But once we get into Q2 and that CPI and the other inflation measures start to fall closer to 2% or below 2%, that's where I think the dollar could weaken and expectations of more rate cuts could increase.
All right, Jason, we wanted to ask you about crypto, Bitcoin near 100K, but we've run out of time. That was Jason Schenker, their president and chief economist at Prestige Economics, and we'll have plenty more ahead. This is Bloomberg. Taking a look at some of the movers in the session so far, and Bitcoin, I mean, we've got that continual watch to 100,000. We actually thought we might reach it, well, several days ago, but we've kind of been trending fairly sideways. Something that has boosted the asset, though, overnight is what we got from President-elect Trump, because essentially he's appointed a new head of the US SEC, and this person is seen as being a bit more pro-crypto. That's Paul Atkins. He's replacing the outgoing Gary Gensler, someone who became pretty famous for regulating through enforcement actions. We could finally get some rules spelled out for the industry. That's, of course, a positive, and that's why you're seeing some gains across the board here today. Yeah, friendly on crypto, friendly to Wall Street as well, I think. And he was, of course, the former SEC commissioner a couple of years back. So, yeah, a proponent of cryptocurrency and fintech companies, just to mention that, too. We'll talk equities with Ken Wong next. This is Bloomberg. $11:29 a.m. if you're watching in Tokyo this morning, also Seoul, but taking a look at how Japanese equities are faring into the lunch break, and we've seen them pushing high throughout the morning, but sort of tracking what we had on Wall Street overnight, because, yes, we've been talking all about the geopolitical risk, what's happening in Europe, of course, what's happening in Korea, but really a lot of equity traders are focused on what's happening with Jay Powell today and his comments that he made on the U.S. economy, saying it's in extraordinarily great shape. Goldilocks, I think, is a appropriate way to put that, because he said they're doing well, but he didn't push back enough to remove the December cut as base case, right? What's interesting, though, is it looks like between now and May, is it 50 basis points of cuts? 50, yeah. That's priced. You take it all the way to next year, the Fed Fund futures curve, you probably get one, at best two more cuts on top of the 50. We'll get an update on the dots, of course, at the next meeting, which is going to be fairly critical on the direction of the dollar in yields. What's interesting, too, is Jason Schenker, who joined us a few minutes back, actually sees one cut now this year, 4 next year, and another 3 in 2026. What's the world going to look like if that's the case? We get 7 cuts or 8 cuts out of the Fed. Anyway, the reality of markets, though, is we are in this unstoppable bull market, led by the S&P and led by the AI trade. Unstoppable for some corners, but certainly we are keeping a close watch on what's happening in Korea. We've got the Kospi there a little bit under pressure, but just some headlines dropping here. The Bank of Korea governor, who actually gave us an exclusive interview yesterday, but has been speaking again with reporters this morning, talking about volatility, and they're saying it's going to ease gradually, barring new shocks. I'm going to put that in lights a little bit. New shocks, I mean, well, we've still got a lot to play out in this sort of situation. We've got an impeachment vote that could be coming up as soon as this weekend, but they are saying that what's happened so far is not going to have any sort of impact on the GDP outlook for now. They're also talking about bond purchases. They have promised ample liquidity, but it's not equal to quantitative easing. That's what they're saying there. So that's how Korea equities are looking right now. Let's bring in Marvin Chen, who covers Asian equities for Bloomberg Intelligence, to maybe put this into context for us, the policy outlook, the valuation, Marvin, of this equity market, this political mess that's going on. What's going through your mind? What's the initial advice here?
Yeah, I think, this political unrest does increase uncertainties in the near term, and investors are going to have to price that in. We do think that will put some pressure on equity outflows as well as the currency in the near term. But Korea has actually seen 4 months of consecutive outflows, and December likely being the 5th for a variety of reasons. One, we have the strong dollar. Secondly, we've seen strong downward earnings revisions and this kind of perception that Korean tech has fallen behind and not been able to capitalize on this AI demand. And lastly is this slow uptake in the corporate value up program, which likely will be put on the back burner now with this political unrest. So we think the onus will be on corporates to kind of improve their shareholder returns.
And how seriously is that going to be taken if the government mandate isn't there for corporates to go ahead and push through corporate governance reform? Are they actually likely to do it? And how does that then impact the overall case for Korean equities?
Yeah, I think buybacks will be an important feature to watch in the Korean market next year. I think corporates will look to China and Japan playbook where, these markets have really struggled with valuations and unlocking shareholder value. So, we've seen Samsung announce a 10 trillion won buyback in November. SK Hynix has also announced some buybacks. So we think this is a signal of more to come in 2025.
Just briefly, what's the earnings outlook here for this market next year?
We're still seeing strong double-digit earnings growth expected, consensus expectations, but that is kind of declining fast. Yeah.
Okay. Marvin, fantastic. Marvin Chen there out of Bloomberg Intelligence, our equity analyst there, oversees, of course, market strategy here, equity market strategy for the Asia Pacific. Joining us here on set as well is Ken Wong, Asian equity portfolio specialist at Eastspring Investments. Ken, nice to see you, sir, as we wrap up this year. Where should Korea feature in one's portfolio next year?
Well, within our emerging market funds, we are overweight Korea, and we have been, even prior to this particular event. The fact is that when we talk about valuations, either, sort of FY1, FY2, they're very attractive, right? Yeah. I think you noted earlier, 8-9 times forward earnings is something that investors are quite, sort of attracted to. Number two, overall earnings growth, yes, while consensus are, kind of thinking whether or not to actually have a bit of a downward revisions, it's still 20+%. When you look at 2025 across all the Asian countries as a whole, Korea actually has the highest potential when it comes to overall earnings growth, at least from a percentage standpoint. Okay. The fact is that Korea is also the, sort of the biggest underperforming market this year here in Asia. It's down 20+%. Yep. Its heavyweight is down 30+% this year. So when it comes to looking at opportunities for 2025, with the noise aside, this is right now an opportunity for those investors who are still wanting to chase on attractive valuations, coupled with potential still fairly strong, robust growth opportunities. And with the fact that the markets have underperformed so much, that's why there are individuals who are actually investing in Korea at the moment. When you look at the emerging market funds as a whole, while the markets in general has seen outflows from overall foreign investors, the fact is that emerging market funds have actually seen some positive inflows into Korea over the past couple of months, even prior to what we've seen over the past few days.
EM generally going into next year, do you think that it's tempting enough for investors in the face of what does also seem to be setting up just further U.S. exceptionalism?
Yeah, this is very tough to say at the moment because obviously geopolitics is going to really be a very important aspect as we approach the next month when there's a lot more things happening. Ultimately, though, sort of with this volatility is actually some opportunities for investors. Now, the fact is that when we talk about the Korean markets, it has always traded at a discount because of some of the uncertainty around corporate governance, around specifically a lot of the family-owned run businesses to see how they can be more efficient. So if we do start to see more of these share buybacks, doing more sort of more corporate governance related issues to really improve on the overall investability of the markets, there's absolutely no reason why we can't see a re-rating of the Korean markets. But right now for this year, it has been very much a de-rating of the markets.
Well, just to interject here as well, I think to the point Bell was making, U.S. exceptionalism, I'll form it into a question for you in a moment here. Bitcoin, in fact, just hitting 100,000. There we go. 6-digit mark for Bitcoin. I think we're trading a couple of dollars below that at the moment. And I think the latest catalyst here is the SEC pick
Yes,
out of President-elect.
Yes, we've got a new SEC chair coming in. This is Paul Atkins, and he's replacing the outgoing chair, Gary Gensler, who already said he was going to be resigning. Trump had said he was going to fire him on day one anyway. But we have sort of seen that pro-crypto stance that's shaping up through markets and institutional investors. Maybe this is what finally starts to bring them in, because crypto has sort of traded sideways. People weren't leaving the market, but it wasn't really attracting new investors either. Maybe that thesis is sort of changing off the back of this new SEC chair. Question, of course, really who takes the regulatory onus, though, for crypto? Is it the SEC or is it the CFTC going forward in the US as well?
Yeah, and Ken, I guess the question and how the transmission effect to you is, there's a lot of tailwind behind the Trump trades, right? Whether it's this, higher yields, the S&P, what have you. Are you having to push back a lot against U.S. exceptionalism, I guess, to build on the earlier point?
Now, the fact is that the markets have done very well, especially in the U.S., right, especially post-Trump. Yeah. And a lot of investors are now wondering, how do we position ourselves in 2025? Because the markets continue to set record highs, kind of record highs after record highs. And so this is one of those situations where, looking at where we are and into 2025, where is the dollar going to head? Now, the fact is that if the U.S. economy continues to run at a very high pace, and the notion is that maybe the Fed might not need to lower interest rates or is not willing to lower interest rates as quickly as anticipated because of that potential for higher inflation opportunities, then there is potentially further room for U.S. capital assets to continue to appreciate because of that strong dollar. But again, the reversal is if we continue to see these interest rate drops and let's say that the U.S. dollar does actually start to weaken, as what President-elect Trump has actually wanted to do, right? You want a weaker dollar so that your exports are actually a bit more attractive. So if those actually can stand true, this is where we see better opportunities for Asian equity markets, because the correlation between a slightly weakening dollar and Asian equity markets are very high. When you see that weakening of the dollar, you see a much better performance for Asian stocks. So that's really how we might think the markets should position itself in 2025, would potentially believe that, hey, maybe the dollar might pull back a little bit more from where we are right now.
I mean, that's sort of, what we do see, a weaker dollar, better for Asian equities. Does that hold true, though, for Chinese equities next year, do you think?
It can. I mean, look at the renminbi right now, right? It's back down to about 7.3 to the dollar. So, we did approach close to 7 earlier this year. And then we've gone back the other way, and we're back down to about 7.3. So I think right now it's also very important to see where the renminbi is going to head, because if you do start to see a strengthening of the renminbi, then that potentially has less opportunities for capital outflows, right? If the renminbi is strong, there's absolutely no reason why, onshore investors would want to see more of their assets going overseas. But the fact is that over the past few years, that hasn't been the case. That's also deterred some of the onshore investors wanting to invest in the China markets as well.
Just your final thoughts on India. We haven't touched on that. It's done very well. Speaking of markets that have done well, what is an opportunity set going into next year? Because it's expensive. We know it can remain expensive. How does that feature right now into a strategy?
It's very important to focus on where the domestic investors and whether or not they're going to continue to invest in the markets.
It's a bubble in some parts of that. I mean, the small cap space,
the small cap space, correct. Right. Correct. The small cap space, but the large cap space are actually trading near historical averages. Yes. So it's really been that, sort of that nifty mid cap, of mid cap, small caps, that's really kind of outperformed, and valuations are significantly well above its historical averages. Right. But the fact is that the past couple months, we've seen foreign capital outflows because some of the foreign investors, are looking at other opportunities, for instance, like in China, and just, want to take a bit of profit. Yep. But with 2025 coming, if that domestic investor base continues to invest in the India stock market, and we anticipate that they will, and potentially if foreign investors are looking at opportunities again, and if they see the India market doing well again, no doubt, like what we've seen in the past few years, they will go back in, and those are really opportunities. And the fact is yes, while valuations are slightly higher than anticipated, if earnings also come in higher than anticipated as well, that could also boost their sentiment for India.
All right, Ken, thanks very much for joining us this morning. That's Ken Wong there, Asian Equity Portfolio Specialist at Eastspring Investments. And just as Ken was here in the studio, we've just had Bitcoin topping $100,000 a token. Now, Dave, a bit of size and scope on this one as well. $1.4 trillion. $1.4 trillion. That is how much crypto assets have rallied since Trump's election victory just 1 month ago. Huge amount of value that's been added, but we'll have plenty more ahead. This is Bloomberg. Time now for Trending in China and a look at what's making headlines in national newspapers. Well, state media is sending signals on how to view economic growth, and this seems to be playing into sentiment this morning. But the official Xinhua news agency has published a series of articles with part one focusing on the growth rate. It downplays the importance of fast GDP growth, saying that while it was once playing a great role, it's cost a lot in terms of resources and the environment.
Yeah, this reminds me of a conversation I maybe have regularly with HR when they talk about compensation for the following year. Don't focus on the number. Banter aside. The article also cautions against what it calls worship and speed, saying that it would affect future growth, and that the question is not whether China can grow faster, but whether it needs to. Xinhua says the expansion slightly below the 5% target is acceptable. Now, could this be a signal, I guess, that no large-scale stimulus is imminent?
Yeah, Dave, I'm still focused on your quality over quantity, but that sort of is playing into it,
yeah.
right?
Because quality doesn't pay the bills, though.
No, it does not.
Nor does it pay for the frills.
But it does seem like China's government, they're sort of saying, look, we're going to get close to that growth target of 5%. We're not going to get quite near to it, but don't worry. The question is, do traders worry about that? Because certainly if you take a look at how we're trading in equities this morning, it's just another reason that stacks up against Chinese stocks, it seems.
Yeah. I'll lead into positives here. We haven't retraced all the way back to the lows. So I think the narrative that they've put a floor underneath the equity market, which really, to Bell's point, has really been part and parcel of the economic package. That the stock market is one consideration as something that underscores sentiment here. Anyway, that's the story there. The other big China story, which we haven't gotten to, which in fact right now is a perfect segue to talk about this, is this GM story that it will incur more than $5 billion in charges and write-downs from its China joint venture, as well as closing its factories and restructuring its operations here.
Yeah, really big one to be talking about, especially when you've got FDI that's really not coming back into the country either. So what does this sort of signal perhaps as a bit of a litmus case? But let's bring in our transport reporter, Danny Lee, and just talk us through how drastic these changes are in the country, China, for GM.
Yeah, I mean, this really sounds like a GM move of a quality over quantity here as well, right, basically. So what we hear is basically they are trying to right-size the business with these factory closures, cutting unprofitable models. And so this is just a reflection of how much over a multi-year period it has struggled to keep up with the changes in the China market, struggled to compete against homegrown competitors such as BYD. And so this is a cost for them to try and salvage failing, a collapsing operation, which it used to generate up to $2 billion in annual profit to GM globally. Now, in the first 9 months of this year, made a loss of $347 million in the China market. So this is the cost for them with their partnership with the state-run SAIC to try and figure out how to move forward and to try and turn profitable again.
Well, how does this look like moving forward, particularly on the GM side?
I think it's going to be a tough one because when you look at what someone like Mary Barra, the CEO, had said, this is a race to the bottom, how crowded this market is, and you can see already how crowded it has become for GM, trying to compete when it used to be one of the best sellers is now an also-ran. And so it's confident, though, that it's this $5 billion write-down and charges it's making will allow them to turn profitable without having to make further capital investments, because that's the last thing I think investors would want to hear about if they're trying to turn around this operation. So tall order, though, given the stress we've seen in the global automotive industry of like Stellantis, Nissan, Volkswagen, General Motors also struggling, all linked back to the China market and all how these global legacy automakers are struggling against Chinese peers.
Yeah, EVs in particular. Bill and I were talking about this, right? 18% up on sales in November, 50% up within that on the segment on EVs and hybrids. Danny, thank you so much. Danny Lee, our transport reporter there. Let's stay slightly on theme here, talk about logistics, generally speaking. So you have Dubai-based logistics giant DP World, optimistic about trade growth in Asian countries, including in China. CEO Sultan Ahmed bin Sulayem spoke to us exclusively about why he's not too worried about China's lackluster recovery.
If you look at Asia, China trade with the Asian is going to reach $680 billion in the next 10 years. This is a huge growth. If you look at the BRICS countries, their trade among each other is close to $16 billion compared to OECD is about 13 something billion. So you can see growth in non-Western markets is huge. In Africa, the demand for product from China have doubled just in 1 year.
So where do you see the biggest growth for 2025?
We see in India definitely big growth. That's why we're investing a lot in India. We see in Indonesia growth. We see in China growth steady. We recently started a service, a new route connecting Malaysia through Thailand and our logistics partner, Laos, into China. And we're sending like 2,000 containers every week. And that's growing.
Taking a look at 2025, what gives you hope amidst all the uncertainty that people are talking about?
Growth in the market gives me hope. A lot of products still need to be delivered. A lot of shortage of products around the world because of the pandemic. We haven't yet recovered from the pandemic. Bear in mind, China has just opened only a year ago or so. And a lot of factories are still dealing with the backlog of the cargo that they haven't produced. And this is not in China, that's in many countries in the Far East. So it gives me hope that growth will continue.
You talk about China a lot and the expectations that China will recover. When do you see full recovery happening for China?
People look at the number in a misleading way. China, in 2010, they had 10 trillion trade and they had 10% growth. And now they have 23 trillion trade with maybe 6% or 5.5%. 5.5% of 23 trillion is more than 10% of 10 trillion. So people don't look at the big number. They look at comparing two instances. Oh, China doesn't have 10% growth. Nobody can sustain 10% growth. It's a huge market.
But China's recovery has been pretty lackluster, not as fast as people anticipated. When do you see China going back to its full potential, even if it's 5% growth? Because right now, it's looking at sub-5.
Well, I have confidence in the leadership in China, and they know what they're doing. Believe me, they are doing the right thing, the right policies, and encouraging growth in their country. But again, that country doesn't want too much growth also. You have to bear in mind, too much growth for China will increase the costs. Cost is very sensitive to China. And a lot of policies now in China is how to produce outside China. So they cannot afford to produce a lot of products in China itself.
You can catch our full interview with the DP World CEO Sultan Ahmed bin Sulayem on Insight with Haslinda Amin. That's coming up shortly, 11:30 a.m. Hong Kong time. We'll have plenty more ahead. This is Bloomberg.
Okay, welcome back to shows. It's time to pop open that bottle of bubbly, whether that's a bottle of Bollinger, bring out a Dom, maybe, if you're in the crypto space. So not only did Bitcoin hit 100,000, market cap also hit 2 trillion, in fact. So it's not just near. In fact, it's a little bit above that, in fact, on the market cap space. But Bell was making a very good point here. If you juxtapose the market cap of Bitcoin, while perhaps as a single company it might be massive, as an asset class compared to equity markets, there's still ways to go here. Oh, yeah. Where is that? Oh, we're not looking. What's this?
Well, these are also AI-linked stocks in China, which we can get to in a moment. But we do want to just sort of draw a line under that, what we were just discussing there, because it's an exciting day for anyone who's been a Bitcoin believer from way back. You reached 100,000. We have seen these calls for years that we would reach this point, and we're finally there. But to put it in context versus what we see for global equities, well, this is taking a look at the World Exchange Market Cap, which is the value of every equity out there in the globe, and you're sitting at $126 trillion. So 2 trillion versus 126 trillion. But of course, when you do see more regulation coming through for crypto in the US in particular, with the appointment of Paul Atkins over the outgoing SEC chair Gary Gensler, you could tempt a lot more institutional investors into the space, and that's broadly supportive for crypto prices and broader adoption. But what else we're tracking, as we said, these AI stocks, these are ones that are linked or in China. But essentially, we've heard from OpenAI CEO Sam Altman, and he's saying that US allies should partner on AI to take on China in this space. So they're proposing a sort of North American compact for AI. It's sort of about trying to streamline access to financing, supply chains, develop AI in the US and neighboring countries. But really, if you were to look at who's winning the AI race right now, it does seem like US is retaining the lead. At least that's according to the latest report from Stanford. A quick check as well what's happening in Hong Kong this morning.
Yeah, Hang Seng Index, we should be slightly lower here, moving against the grain. Of course, the global equity market rally. Hang Seng Index as we enter the last hour of the morning session, 19,532. This is the China Show.